Hello, everybody. Good afternoon, good evening, good morning if you're in Europe. Welcome to Daily Market Review of NVIDIA earnings today. Market was eventful regardless of the NVIDIA earnings, which is typically not the case. But let's read the order flow. It was low-key clean, although I was offside with the market personally. I had a bullish bias. Didn't pan out. It's what it is. It happens. It's okay. Today's date also is August 28th, so let's take a look at it. So I'm going to start with the overnight price action here because I think, or I believe, that's actually what set up the market today during the New York session to the downside. So here's what happened. First of all, let me cover the yesterday's PA, which is here. This rally, we have sell side rated all the way to the high. We have the dealing range EQ, and right above the dealing range in premium, it has, so Nasdaq has clean lows, right? Equal lows, and up here it also left equal highs. Okay, so now the market has equal highs on the buy side and equal lows on the sell side. In this case, in this event, what you have to do is, if you see equals on both sides, you gotta wait for one side to get rated, then you fade that move. Okay, so here, as you can see, during overnight session, it came down to the equal lows first, dig down one more time into the dealing range equilibrium, and formed a buy model there. Okay, I think everyone can see this buy model here. So here, let me just zoom in a little bit. Market dropped, swept the sell side, displaced higher. With that displacement right here, it formed and confirmed a reversal. Why? Because there's order block formation, displacement. Now the market is in buy model. Okay, if there's SMT, even better, and there was SMT. So in this case, what you need to do is, because it rated the equal lows, now you flip the coin and you fade this whole move. Once the market is in buy model, target the equal highs. So during overnight session, that's literally what happened. Market rallied, sig buy side, and stopped here without taking the buy side, without taking the drawn liquidity equal highs. Now this is important. This came at 5 a.m. actually, right, during the London session. The reason that it's important is because ES actually traded above it. ES took the high, which was equals also on ES, took the high, and meaning it formed an SMT divergence, sell side, buy side, bearish SMT divergence. Okay, and this is also previous day high, so it's forming a bearish SMT divergence at the previous day high, leaving equals, relatively equal highs, which will be targeted later on. I don't know when, but it's going to be targeted later on. But that was this. I think that's set up the market, the New York session today, for a downtrend. Now, initially, I thought it could fade that move to the downside right during the pre-market. I was thinking about, basically, this was my thought process. We have clean lows here, we have clean lows here, we have kind of clean lows here as well, right? So the market dropped, right? Seeked some sell side, digged one more time, and rejected it. So V-shape, which means there is a bullish order block and a displacement, right? And a breaker block, whatever you call it, it's the same thing really. So this is the OB or breaker, and displacement here, like two fair value gaps, and it kept going higher and higher and higher. This is right before New York open, which made me think that we could actually displace to the upside, expand to the upside today, and take the equal highs. But here's what I missed. First of all, I did not care about the bearish SMT, which was the mistake one, because it's actually forming at a daily point of interest, previous day high. Okay, that was the first thing that I disregarded. And the second thing was the range EQ. I didn't even look at the range EQ. So we have the 5 a.m. high all the way down to the pre-market low. Okay, here it came up to the range EQ and rejected it. And in that case, what it does is, I'm going to zoom in a little bit. What it does is, sweeping buy side, okay, and displacing lower. Okay, this is basically ICT 2022 model, and it's coming from premium, which means the market should, algorithmically speaking, reprice down into the sell side, which is right here, and it did so. And this happened at 9:17. The New York session is still not open. Okay, now we have a new dealing range though on the higher time frame perspective, and here kind of relatively equal highs with this high right there. I mean, it looks easier on the hindsight, obviously, but it was definitely not the case. So here at open, it swept the sell side, displaced higher, formed a bullish order block. This was I was like, okay, this is it. We're gonna go for the equal highs. That was the case, which is why I alerted the long idea. So I saw the sell side right before New York open, displacement, and the OB was respected, right? So it expanded higher, took the buy side, but it failed, unfortunately. This is the part that I was not expecting. It failed at the buy side. So at open, this ended up being Judas. 9:30 rallied, took buy side, and basically faded the whole move within actually 5 minutes. So this is the 9:35 candle open, and this is 9:30. So this ended up being a whole wick, right? And that's when I didn't switch bias, but that's when I actually ditched the long idea, because the buy side was swept. So initially I said this is a seek and destroy because it's going from buy side, sell side, buy side, sell side. But this is what happened. Buy side was taken, displaced lower in that displacement. So this is the first thing, the order block. Okay, first leg actually always starts with an OB. This is a bearish order block, right? And there's a displacement which confirms the sell side delivery after Judas swing. It rated the bearish OB, sold off. Okay, now we are trading down to the downside. I can delete all that. So this is the first thing. Then it accumulated here, which means if there's an accumulation, you always have to be aware of the first fair value gap above or below, depends on the direction. In this case, this is the SIBI, the only SIBI above the accumulation. For me to go bullish in this case, it has to flip this fair value gap to confirm a trap here, and which in this case it never did so. So there was literally no long setup here in the morning session. So that's the first thing. And the second thing is the dealing range EQ, high from 9:30 all the way down to the low, comes up to the premium. It formed an SMT divergence here at the highs, which means the turtle soup occurred on ES. Nasdaq didn't take it, and there's a displacement. In that displacement, first leg always starts with a bullish or bearish order block here. This is the OB. You can use the wick also if you want to. It traded up there, formed a new bearish SMT here, and sold off, tagged the sell side, and it kept going lower until it stopped here, which is, I believe it was the previous day low. I'm not going to go on to the higher time frame right now because that's not the case. I'm just reading the bullish, lower time frame order flow here. So it sold off. This is the first accumulation. Again, the first thing you have to do is to be aware of the fair value gap above the accumulation, right? And which is this one. Once it flips that, now you have trap, and the market is in buy model, and it's going to reprice to do two things really. One, seek buy side. Either seek buy side or reprice the market to the range EQ. Okay, so here's the range EQ. From the last drop high all the way down to the accumulation low, this is the range EQ, and look what it happens. Once the buy model is initiated, you have OB, okay, displacement. I wouldn't take this as an OB, to be honest with you. I would take this one rather, because at this point you technically don't know whether this is a trap or not, but after this displacement you know that there is a trap now, and you have this OB right here, 3 consecutive down close candle with a displacement. That's the long setup. So market offered buy side, sold off. This is lower time frame range EQ on the buy side of the curve, came down to the range EQ, flipped another order block here, used it, one setup for life, and range EQ came. Now let's take a look at what happened during the range EQ. Here's the sell sign. It took it, and I'll tell you how it took it. Now the range EQ, it did not diverge here, but it did one thing: accumulation. Now again, if there's an accumulation, you got to be aware of the first fair value gap below or above, whether it's a bullish or bearish. In this case, it's a bearish accumulation because it's accumulating in premium. You got to be excuse me, you got to be aware of the lower BISI. Now once it flips that BISI, the odds of going higher is less, especially if it's coming from range equilibrium in a bearish order flow, because now we have trap, and it set the trap with here first leg initiation. This is the order block. This is the first leg, sold off. Now you have this short-term dealing range, came all the way up to the premium, or range EQ rather, which is a trap fair value gap also, and second leg, second stage, boom. So tag the sell side. Now here, let me zoom out a little bit. Those are the only things I'm going to mention, and I'll be looking at this rally as well because I think it's important. So here's what I'm going to do. This is the first leg. I cannot stress this enough, guys. Look, initially sold off, first pullback, push down, second pullback. Now it pushed down one more time. Now here's the thing, as I always say, after second leg is completed, the market has more potential to reverse. Okay, meaning one pullback, second pullback, market is completed, it's distribution. Okay, now that's why the market actually flipped here with energy, in my opinion. That's basically my interpretation of the market, but it usually delivers with two legs. Okay, now with this last sell side delivery, it actually completed the second leg and accumulated here. In that accumulation, I think this was like, if you go short here, you're doing it wrong, because this is going to be like a third leg. It happens, but very rarely. So here there's an accumulation, another accumulation. It swept the sell side here, rejected it, and formed an order block basically right here after the sweep, or a breaker block, whichever you want to use. It's the same thing. There's no displacement, but there's sweep. So technically speaking, if you're right with the bullish bias here, down here, the order block should not fail, so the stop loss should be below the OB because it already took the sell side anyways. And then it displaced higher, took the first buy side liquidity, which is relatively equal, acted as a drawn liquidity, and afterwards it sold off, which is, I'm not going to talk about it because it's Nvidia earnings, quite irrelevant for the market anyway, so I'm not going to be talking about it that much. The other thing I'm going to mention here is, so it dig 3 times to the buy side, sold off. Now market is in sell model. It initiates with right here the OB with the displacement, comes up to the range EQ of that last leg, sells off and goes for it. So this is another range order block if you want to use it, and sells off, tags the sell side. So the most important part, in my opinion, is to understand first legs usually starts with, not usually, always actually starts with an order block or a breaker block. Pretty much the same thing, honestly. And another important point is 2 stages of the delivery. After the second stage, if you want to reverse trade it or counter trend trade it, you can do it, but not before. If you do it before, you have to be targeting the range EQ. Like I longed this one. I took this trade. My mistake was not taking into consideration of the fact that it was the second pullback. So I was actually looking for draw as buy side instead, and that was the mistake I was doing here. I took the win, but regardless, if I saw that this was the second pullback only instead of the third, I would have targeted the draw and liquidity. That would have been the proper way to trade it. Or I would have, if I knew it was the second one, I would have just taken like hard TP at the range EQ. Okay, so that's the most important thing. It is tradable. Even this is tradable if you want to trade the pullback. They're all tradable, but ideally don't do it. You know, not necessary. It's not a necessary risk. But anyways, guys, hope you guys find this insightful. Hope we get good stuff for tomorrow. We just gapped down. Nvidia earnings came bullish, but I mean the numbers are bullish, but the market sentiment is bearish. So obviously I'm not gonna keep my bullish bias after today's close, because the idea for me to stay bullish was turtle soup at the equal lows here, and today's candle close actually violated that and invalidated that idea. So the market is not ready to make a run. So I'm not sticking to the bullish bias just for now until the order flow changes. For now, what I'll be looking at would be right here, these lows, which is at 19,100. It's equal lows on, I think it's hourly. Yep, clean lows. I think that's the drawn liquidity, but we'll see how New York goes. Until this market forms a higher time frame on B, I'll be keeping that bias to the downside for now. But yeah. Anyways, guys, hope you find this insightful. I'll talk to you later. Tomorrow's the live stream at 8:30. We have GDP numbers coming out. Hopefully we'll get a good session. It's Thursday. Fingers crossed. We'll see what happens, but I'll be live streaming. Hope you guys can tune in. If not, I'll be alerting my entries, exits, and all that, and analysis in my channel as usual anyway. So if you don't have time to watch it, you'll be able to access my thoughts and charts for my channel anyways. So have a great day, guys. Enjoy the night. See ya.